Good afternoon, everyone, and welcome. This is Jason, and thank you for joining. Let's start with a quick sound and visual check. Let's just make sure that everyone can hear me okay and that everyone can see the screen as it's being presented okay. We've got the questions box open. Just do a quick yes and yes. I just want to make sure that we're coming through okay and that you can see the screen okay. We'll be using the questions box throughout the session today. Perfect. Thanks, TJ. Thanks, Phyllis. Awesome. Awesome. Well, this is part of the free education series. And we're very excited to have Ronaldo Soriano with us. He's going to be talking about something that we get asked about a lot, which is, based on where the market is at right now, how is it possible to generate consistent results in a market that can never be beat right now? And it's headed in one direction or another, especially in August. We hear a lot of talk about a pullback, a correction. It didn't take much a few weeks ago for the markets to pull back in a really big way. How, in fact, can you work with that, and how can you trade effectively in those conditions, especially with the reality that 95% of the folks out there just aren't doing very well? So we've got Ronaldo Soriano with us. We're thrilled to have him. If he sounds familiar, that's for good reason. He is a trader and an author, and he's been doing this for the last 20 years. And he also has been educating for the last 20 years. So as always, we'll keep this to be a very informal session. We'll field any questions that come up. I'll keep an eye on the questions box. And Ronaldo, thank you for joining. It's great to have you here. I'll turn it over to you.
Beautiful. Thank you very much, Jason. Welcome, everyone. Yeah, my name is Ronaldo, and thanks once again, Jason and Top Shelf for inviting me to speak to traders, especially if you're a novice or you're intermediate. And it's also actually also good for advanced. It's always a good reminder in terms of key pieces of information that perhaps that you may be lacking or something you may learn here today. My job here today is really nothing about me. I'm going to explain a little bit of who I am, but mainly some 3 simple processes or steps that you'll be able to add in terms of your trading that could assist you and help you to be more profitable or to be a little bit more consistent if consistency is a big challenge for you when it comes to trading. So here's the agenda. Just a little bit about myself. I'm going to explain to you who I am, why you can never beat the market, bullish or bearish, and then 3 simple steps on how you can profit consistently from a market you can never beat. And then we're going to have a Q&A session after that. I only have 45 minutes, but I'm going to give as much as great information to you as much as possible. But if you have any further questions, please feel free to ask. So I started trading in 1996, so more than 22 years ago. I went full-time in 2002. My background is physics and mathematics and computer science and mathematics. So I worked in the corporate world for 6 years from 1996 to 2002. Then I went full-time trading the marketplace. Basically, I started in Australia. 2007, I moved to the US. One of the reasons why I moved here as well was to know more about how the trading education industry works, and at the same time, I'm a type of person who's also very logical. That rather than buying at retail price point, how can I buy at wholesale? Also, I wanted to know the mechanics on how institutions really trade. So through networking, I was fortunate enough to meet a lot of professional traders who used to trade at New York Stock Exchange, the Chicago Mercantile Exchange, and the CBOE. Through there, I learned from institutional traders, and they trade differently compared to retail trading. Like everybody else, to be honest with you, I never learned how to trade by myself. In my opinion, I believe it's not a smart thing to do, especially if you're a type of person who likes not perfectionism. However, I was getting to a space that I believe that if you really want to do things correctly, then you have to do things correctly. So unfortunately, like with the seminars and the workshops I've been to, all they also teach was just simply trading systems. And then when I went to the trading floor, it's totally different. You see the person who's in front of you, and institutional type of trading is really, really different compared to retail trading. And hence, in 2012, I published a book called Why You Could Be Destined to Fail in Trading, How You Can Avoid It. This guy right here, Dan, used to trade basically CME for 25 years. So he's also a friend at the same time, a good advisor as well on what's really happening on the trading floor. Learn a lot from him. Also learn a lot from other guys who used to trade in the CME and New York Stock Exchange. And I really got into the mindset of trading because in 2003 I lost close to 7 figures. It's not because of the system itself, but in the end, it is all about the 6 inches between our ears. I learned so much, and I believe everything happens for a reason. And because of that, I got involved with neurolinguistic programming, hypnotherapy, in order to get myself based up in check. And the reason being too is that when I used to compete, I used to represent Australia in Taekwondo, and then from there, I no longer wanted it. It's almost I self-sabotage myself every time I get to the finals. And then it turns out to be, it also happens with basically with my trading. And I guarantee you that if you're currently trading at this point in time and you have inconsistencies, then maybe perhaps it's got something to do in regards to your belief systems. We're also going to talk about that. At the end of the day, any type of trading system, in my opinion, is 100% success rate. Where it varies when it comes to trading results is mainly the during part, where can you control your own internal emotions? Can you control your anxiety, your fear? Mainly the ego component between oneself, which we're going to discuss about that too. So in that process, I really got into self-development, and I started basically coaching private clients mainly in the past. And then in 2014, I developed a program, and the reason being is that I wanted really to know what works and what didn't work in the trading education industry. Um, Unfortunately, a lot of, if you notice, everything is about systems. They will just teach you about systems, but they didn't really never touch really completely in regards to the mental component and also the physical component. As an athlete, if you really want to win in a world-class level, you need all these three aspects of conditioning in order for you to really be up the top. Currently, actually, I've been hired by one of the top #1 ranked tennis player in Mexico, and he's an up-and-coming kid, so he's really good, talented player. But what's missing is mainly the physical conditioning component. Mentally, really strong, and then worked with him on the coaching side on the mental game, and knock on wood, he hasn't lost a single match. But now that he's coming up, competing against bigger players, what's the next step from him is simply the physical conditioning component. But in trading, you don't need the physical conditioning in terms of uh, physical contact. In trading, on the other hand, you will need the mental conditioning. You also need the physical conditioning, which we're going to discuss about that, and a really good technical conditioning. When you have all these three aspects, then you will have at least a bigger chance, bigger probability of winning when you're trading either on a daily basis, on a two or swing trading, or even position trading. So that being said, I also coach part-time at Stanford University, and here actually this was based in Mexico, where the top athletes from all over Latin America, all the way to North America, as far as Canada, they meet over there and have a workshop, and so also got invited to talk to them about sports psychology. Hence, regular speaker and article contributor. Today is really not about me, but mainly for you. So if you have any questions, please feel free. And the reason being is my mission and purpose is simply to inspire traders or people in general the awareness and notify them the pitfalls basically of trading. Why trading is one of the most challenging professions that can either make you a lot of money or can make you or lose a lot of money. So at the same time, if 75 to 95% of retail traders lose money from trading, then the question is, how can we reduce that? I believe about awareness. okay, and being mindful. What I want you to do, on the other hand, is I want to invite you to have a growth mindset and to be open for feedback. I believe that good traders, and this is also what I've met a lot of really good traders. Did you know that on the trading floor, same statistics and basically what you see from here, that in the past, people who go to the trading floor, and you have a minimum of at least $100,000 to play in the trading floor, in the first basically year, about 70% will fail, will leave. And then about another 3 years, out of that 3 out of 10, 1 or 2 will leave, and only probably 1 will actually be in the game for a very long time. And unfortunately, that's just the way how it is. In my opinion, sports is the same, business is the same. There's a really good book that I would recommend for you to read. It's called Principles by Ray Dalio. Here's also another book by Tony Robbins that I purchased called Money to Master the Game, and he interviewed Ray Dalio. You can Google him. He's got a few videos on YouTube, him being interviewed. He hasn't lost for 40 years. He managed more than $160 billion in asset management. And the question now is, how did he do it? So he wrote the book called Principles. And it's so really good to read it and just to know the principles and the values of how a successful basic person you're meant to be or meant to have in order to be successful. Likewise, he shared the way how he trades in terms of what he looks for. But he basically mentioned that you can never, ever beat the markets. You can win. And if you can see right here, so look at here. What you got to know, Tony, is that you can win, but you can't do it by trying to beat the system. You don't want to try. I have 1,500 employees and 40 years of experience, and it's a tough game for me. This is poker with the best poker players on earth. So, if your knowledge is so limited and your skill set and experience is also limited, the odds and probability of you winning against the market is very slim. If you do not have a plan and you haven't been educated properly, the odds and probability that you're also going to win is very slim. And this is why 75% to 95% of retail traders actually lose. The markets in general have all the resources in the world. You need to remind yourself that information is so important trading the markets. And if you do not have that piece of information, simply, I'm sorry to say, but you're pretty much just gambling. Systems alone is not enough in order for you to create a sound probability in order for you to get in, either to buy or to sell. And if you're thinking of creating EAs and algorithms, it is also pretty unlikely that you're going to win, unless if your server is so close to the exchange and you have at least a minimum of $20,000 to $25,000 to subscribe to the piece of data and a piece of information. I don't know whether you know it or not, big institutions will pay for information. Sometimes the information they already have it ahead out of everybody. Mind you that Goldman Sachs has about 97.2 success rate. In 2008, they had a 91.2% success rate. Remember that they have all the resources in the world. They have 1 picosecond ahead of information ahead of everybody. So how can we beat this type of trading? So what occurred to me is this. The key is for you not to be part of the game. It's important for you to know the game on the other hand. However, the best analogy I could give you is simply, if you look at this whale is simply your institutions, your Goldman Sachs, your Bank of America, your Morgan Stanley, and so forth. The fishes are your retailers. See, like here, they don't even realize that they're actually being eaten. What you need to do is you need to be this fish. You know, they're the ones who basically just eat whatever the whale eats. In other words, that if the whale goes up, you have to go up with it. If it goes sideways, you have to go sideways with it. If it goes down, you have to go down with it. That is pure objectivity. You are being what we call an observer. Once I started becoming an observer of the markets, where if you know math and you know basic statistics, remember that statistics is based on forecasting, looking for data that will give you the probability to forecast future price movement. That is what technical analysis is to forecast future price movement using past and present price movement or price data to create the probability whether the price will go up, down, or sideways. Remember, there's only 3 directions where it's going to go. So in other words, already 33% success rate before you even enter. You just have to find a 66% deficit in order for you to create a good sound probability of what you have to enter. And then you have your risk management and money management set into place. So how do you need, or how do you can then find this piece of information? They're always out there. Hence, that's why day trading, the results for day trading, it's been proven that 100% of retail traders will lose when they're day trading. And that's a lot. If you actually Google about day trading, there is a lot of statistics and a lot of data has been shown by former researchers, either here in UC Berkeley or actually one in UCLA, another one in the East Coast, another one done by a university in Taiwan, because a lot of Asians love to gamble and they like to day trade. So if you're day trading and you don't have enough knowledge, skill sets, and information, you are against in terms of the probability of winning. To win is simply knowing what to look for. Institutions will always leave clues, whether we like it or not. We always look for information, any up and coming news that's bound to happen. And then I'm going to discuss a little bit more in that when it comes to the technical conditioning aspect. So the key is simply for you to be an observer and not for you to be part of the game. When you are part of the game, it's like you playing against LeBron James or Stephen Curry, and you know the game of basketball. You're still going to lose because you're up against professionals here. So that is one of the major key reasons why a lot of retail traders lose, because they're being part of the game. Moving forward from here. Here are 3 simple step processes on how to be a consistent profitable trader where you cannot beat the marketplace. There's 3 conditions, 3 conditioning. One's what we call the mental conditioning, 2 is the body conditioning, and the 3rd is the technical conditioning, where if all of them meet all in one, you have now what we call trading the zone. Remember from the book, so I'm just trying to think which one's which up. Trading in the Zone by Mark Douglas. He speaks a lot about zoning. So how can you be in the zone? So as an athlete, to be in the zone, you have all these 3. That's why if you look at Olympians, they train every day. If you look at world championship competition, they have to train every day. If you look at professional football, professional basketball, they have to train every day. So we're going to talk about this. Let's discuss about mental conditioning. It is imperative for you to master the process to know yourself, to know oneself. And the reason being is that if you know yourself, then you would be able to control your negative emotions, especially the emotions of fear. Remember, there's only basically 3 major emotions that drive the marketplace: fear, greed, and regret. Mainly the other 2 are fear and greed. So when you're in a greed state, the hope will come into place. I want more. Where you're in a fear state, anxiety will come into place, impatience will come into place, and hence you start to micromanage your account. Also, the fear of missing out. Oh, the market is going up, everything is all bullish. Then next you didn't even realize you are buying at supply. When you're buying at supply, your probability is so small that your risk is so huge, right? At this point in time, it doesn't make any sense for you to keep buying through MarketWatch tool. As of yesterday, the interest rates to 2.25. So money is currently tightening up. Why? Due to inflation. When things becomes too expensive, they're going to increase the value of the dollar. Things will become expensive. When things becomes too expensive, all of a sudden unemployment rate will increase, and next thing you know, all the effects will come into effect. The market will drop definitely. It's just a matter of time. Also, there is a lot of pieces of information that you can also look for, because by law, institutions have to report their trades, mainly longer term trades. So these are the things that you need to keep an eye on. Up and coming news, CPI, PPI, the Feds, FOMC meeting minutes, ECB, Bank of Japan, remember about the tariffs, anything that Trump will say, it will affect the marketplace. So by you knowing all these news, and if you're either day trading, swing trading, you need to keep an eye on these news because it will affect price. Remember, price is everything. One of the major issues that retail traders always do is that they trade systems. They trade patterns and they trade indicators. No go. Why? Because they're all lagging. So if you really think about it, in pure business, everything is in pure economics. Everything's all supply and demand, price, everything's all price. The question is, where is price coming from? Price will come from news. News will create supply and demand. When there's more demand, price will go up. When there's more supply, price will basically drop, and hence the volatility, what you can see right at this point in time for the past 2 days. Look, if you look at the VIX, I mean, it went up today, it just basically dropped. In my opinion, it is currently in a state of uncertainty. Once you see a lower high, I'm just actually waiting for the end of the week when that happens. I'm not here to give anybody some form of any advice. However, if you can see it, I mean, we started shorting. I started shorting basically the marketplace. I started buying the VIX. So that being said, it is also very important for you to know and be aware of your limiting beliefs, such as words like trading is hard. I don't know what to look for. It's hard to do this. It is difficult to do that. They are all limiting beliefs. And the reason being, you need to be aware of those because it will also impede your trading success. You need to be aware of your own values and your own principles. Affirmations, or mainly goals, never work when there's conflict between your value systems and your belief system. What does that mean? It means that, for example, this, I'm confident. Your belief system is saying that you're confident. However, but if your value is simply you're fearful that you don't know what's going to happen, and hence where you don't execute, then there's conflict in your belief system of confidence with your fear. It doesn't work. Now, if you're saying that your value is that you are courageous, and then you say to yourself, I am confident, boom, then they're not in synchronicity. Hence, this is why to know your values and or your goals, to know your belief system, to know oneself, then once you have that awareness, you'll know exactly what to do when situations that when the market starts to drop, you will take action. Remember, action, reaction, Newton's third law. You'll know part of your plan is simply, okay, great, I can hedge my positions. There's my offense. This is my defense. To do that, though, is very important for you to be objective. Being objective, looking at the markets the way they are. Remember, the market doesn't care about what you think. It doesn't care about your own opinion. It doesn't care about your own ego. It doesn't care about your own righteousness. It will do whatever it wants to do based on what it wants to do. That's why being an observer, when you're an observer, you're observing the markets, then you're being objective. In a game, when you're being part of the game, you're no longer being objective. You're being subjective. Why? Because your goal is you want to beat the market, but you can't beat the market. If you're a person who's righteous and you think that you can beat them, and you now have, quote unquote, the word hoping, Opium is a dangerous drug when it comes to trading. Part of that meditation is all, and visualization is also important as a process to clear your mind. When you clear your mind, then you can be more objective of what you can see or what the market is actually really telling you. To be honest with you, trading is easy. What makes it challenging is this component, this mental condition, is the 6 inches between our ears. Why? Because with lack of awareness sometimes, and we got impulsive, part of our anxiousness, we'll press the button for the sake of pressing it. Maybe perhaps it's no longer within our own purpose and the goal of why we're trading. Maybe perhaps rather than our goal of making money is now compensating because whatever is missing in our lives is we're compensating using trading. It's pretty sad actually when you think about it. That's why I invite you to have a growth mindset and to be open to coaching. If you do not have a coach, I highly recommend for you to get one. There's a really good book called Mindset by Dr. Carol Dweck. She's a PhD, also a professor at Stanford University, and wrote a book about fixed and growth mindset, which will assist in business, sports, career, and relationships. It's actually a really good book, which I highly recommend. Number 2, let's discuss about body conditioning. Body conditioning is simply what we call the mind-body continuum. It's imperative for you to learn the importance of rest. The mind cannot function if you are not well rested. In other words, if you didn't sleep right, how can the mind function? If you're dehydrated, the mind cannot function. If you don't eat a balanced diet, the mind cannot function. A good example I can give you, one of my experience in my early days of trading, is that I used to day trade, and I had 1,000 shares of Apple, and I just finished eating lunch, and I was basically getting drowsy. So I had my finger on the mouse, and I accidentally pressed the buy button. I tell you what, after that, I wasn't. I was so alert, and I was lucky enough that it went a few cents my way that I had to close it. Being said, if you're day trading, and depending on which time zone that you're at, it is imperative for you to be aware and just to be alert, to stay focused at the job at hand. Remember as well that exercising is an important element to stay fit in order for enough oxygen blood flow that will go through the brain. When you have all this, you're in an alkaline, nutritional based, you will be in a what we call peak performance state. When you're in a peak performance state, remember that each and every time you're trading, you're competing against Olympic athletes out there, Olympic trader athletes, that simply, they're in a job. This, at the end of the day, it is still a job that have a lot of benefits, but if you're not careful with these benefits, and you take advantage of that, and you're not being grateful and you don't appreciate it, you will make a lot of mistakes. 3, okay, let's go through about technical conditioning. 1 is about the importance of macro fundamentals. Technical analysis, in my opinion, is only about 33%. After going through and looking at how institutions do things, do you know that they don't really look at charts when they're actually trading? They only look at charts after trading, when the markets are closed, or during dull period during lunchtime, just to see where the direction is, whether it's still, the trend is still to the upside, to the downside. But when they're in the trading floor, they're no longer looking at charts. They're looking at another person that's in front of you, who is also in the same game of money. If you're slow in your reaction and you miss the price, this is where sometimes they get into fist fights. And the reason being is because you have to be quick. Now, if you're not fast enough and you're still thinking, the price is gone. By knowing the basic foundation of technical analysis, I learned to trade in the very beginning. I learned about systems, about indicators. No one really taught me about price. No one really taught me about going back to the basics of supply and demand. No one really taught me about the energy flow of price. And so I had to take everything and split everything apart, and whatever I knew new is to put it behind closed doors in order for a new piece of information to come in. I need a lot of back testing, a lot of practice, and hence is why daily practice through live trading, in my opinion, is very important. It's also need to have an objective trading methodology, meaning that if I'm buying, you should also be buying. That if you're selling, I should also be selling. That if we're in a group environment and we're just looking at evidence, why we have to enter. Now that's pure objectivity. Once we all have that evidence and we can prove and have enough basis in order for us to prove why we have to enter, either to go long or to go short. And if everybody agrees to it, then that is pure objectivity. It is also important for you to learn how to measure your own probabilities. Probabilities is also very subjective, unfortunately. It will only become objective when a group of us, say, for example, there's what, 20 people in this room. If you can give me a probability, say, for example, that the S&P could potentially drop 90%. If you say 90, one will say 95, one will say 80, one will say 95, one will say 93. And average is 92.3%, then at least we could be able to create an objective probability of what we can do in order for us to enter. From there, we can measure our own position sizing. Position sizing, in my opinion, is one of the most important factors or variables when it comes to trading, based on the probability that you have set for yourself. A lot of systems always focus on risk to reward ratio. Yes, it is very good. However, the risk is based on probability. The reward is also based on probability. Now, you can have a high risk that is also high probability that you will go to your target point for first. It's almost like you having a straight, just straight, or full house. That's high probability. That's happening because the house can have a full house, or sorry, can have a royal flush. Well, at least by measuring your probability, you would be able to put in a trade that you're comfortable with. That's part of your risk management. So never focus on the risk, just the risk to reward ratio, because if your risk is high and your probability is low, will you really put in the trade despite having a 2-to-1 reward to risk ratio? I won't. See, at the beginning, I was doing that. And then going back to my math background, I said, hang on a minute, doesn't make any sense. So then after going through and learning from professional traders, and it's like, well, there's only two ways the price will go. Once you've entered, either it will go to your target point or it will go to your stop loss point. The question now is where it's going to go first. Then you need to find the probability, which is now to find the probability, and here I'll give you a tip. Trends are very important. Look at the energy flow of price. Where is it going? Where is it leading to? To the upside, to the downside? Yes, overall, the market is very bullish. Overall, definitely for sure. Now, on the other hand, the weekly price showed a lower high. What does that mean when it says a lower high? Well, that means that no one is willing to go beyond the last high price. Why? Because it's too expensive. So if you're going to buy a house and the last price was $1 million, currently the price is now at $995,000. Are you really going to place a bid at 1 million, or are you going to put it above 1 million? The only way that you're going to do that if you have enough piece of evidence or information that the value of the house can go beyond $1 million. Other than that, if you do not have any piece of information, will you really place a bid, or will you really buy it? I don't think so, right? So that being said, by you looking into those factors, then you can create that probability, then you can create your risk management, part of your money management, then you can create whether if you're going to enter the trade or not, right? So all these three aspects are very important. Let me go through with you. Maybe it's also, I know that not everybody is visual. Can see my chart, not chart, Forex Factory here, and it says countdown to FOMC. Actually, let me refresh that. So as of yesterday, it was 93.6. Okay, currently updating. 93.6 and 93.6 yesterday. Today is 96. So that's actually huge. Okay, so that's one aspect. When you look in terms of the S&P 500 right here, oh, this is the weekly time frame that I was talking to you about. See this high? Notice that high of 28.62. The last high is 28.76. That's about 14 points away from the last high, but no one was willing to go beyond that. That's why this week is a very important week. Today's Tuesday, Wednesday, Europe is gonna have a public holiday. We have core retail sales tomorrow, retail sales, and then inventories. We have employment rate in Australia Thursday, building permits. So they're gonna keep an eye on that as well, based on the housing industry. And then Friday, nothing really. So pretty much nothing much, and hence, if we go back to the daily time frame, it'll just be consolidating perhaps from here. So here's an important thing that currently we're looking at, is simply it corrected itself for the past 4 days. Here is currently now a higher low where either a continuation of the price to the upside within the trend. Now, part of forecasting is that if no one's willing to go beyond this high, 28.62, and this is a very, very important piece of information. If you see a lower high coming up, this is going to tank all the way back down to the area of demand around the 27.90, 28 area. So you have, mind you, demand will always create ranges like high, because it's like an auction house. There's a plus or minus. Some will go lower, some will go higher, some will go within that area, and hence we call it area or zoning. And if it breaks through this demand all the way back down to around the 2740, 2730 area, which makes sense because if you're not dealing with a bigger time frame of, say, the weekly, this is the low. Nothing has been created in terms of a proper higher low or lower high. Likewise for the lower high. Either we create a new higher high, this is really the lower high, price will head towards and retest this low from the beginning of the year of 2018, low was 25.29. So if it breaks on one side, and if you look in terms of year monthly, notice there were a lot of buying. The question now is, who are all these buyers? But if you look at commitment traders, institutions have actually started selling. Remember, there's a third buyer. Unfortunately, they will sell it to retailers, or they will buy it from retailers. So what we're looking for here is simply, if you have a bearish candle, when the bears will start to head back to the downside, meaning now then that if this really happens, for those pattern traders, this is what we call your evening star pattern. So when this happens, when there's a lot of selling pressure happening, the odds and probability that the price will drop is highly probable. On the other hand, if you want to break through the demand area, then a new higher low will be created. They will retest this high, and perhaps we will break through the new high. Why? Because on the bigger scales of things, yes, you are in a bullish trend, no doubt. But it has to correct itself. Now, once this creates a lower high, the correction, then for the next 2 to 3 years, then I'll be bearish in terms of the correction. But overall, since 2009, you're still in a bullish mode. That's it. Now, if on the other hand, major trend line will be broken sometime in the future, then the S&P is going to go back all the way down to around the 1774. However, those are mainly the conditions that will only happen if and only if the weekly will start to create that lower high. And hence, that's why the VIX, if you notice, the VIX is just hovering around between 10 and 12. So here, after that, in my own opinion, they will retest this upper shadow right there, for sure. No doubt about that. It's just a matter of time that they're going to do that. Okay, so when that happens, this is where timing is important. And so if you like to trade options, I mean, you can go further out in terms and out of the money. That's what I did actually a few days ago. So basically out of the money. So from here on forwards, if you notice, they're prepping themselves in terms of the VIX. If you look at the dollar index is currently very bullish, which it doesn't make any sense because in the connectivity of the whole global economy, when the dollar goes up, why is the S&P also going up? It should be the other way. Why is that the S&P going up eating at money supply? Doesn't make any sense. The only thing that it's currently in sync is with oil at this point in time. So if you don't know what we call the petrodollar, where the dollar index, remember in 1973, they took the gold standards out. So in return, to really have the valuation of the dollar is that they have to grab the 6 major currencies that are really powerful as being traded worldwide, and that's what they created, the US dollar index. And then from there, by oil as well, you have to change your currency from whatever currency you have to the US dollar, right? So everything that you see fit, everything is all connected, from oil to gold, resources such as copper. So if you notice, gold has been tanking, and the reason being is because of the dollar going up. Oil, I'm bearish with oil. I've been bearish with gold. I've been bearish with oil. TYX is, if you notice, the treasury yield and the dollar index should be in the same correlation. This is why if you notice, if I look at the daily, the treasury yield is currently the leading indicator. So that's why I know for a fact that the dollar index is just way too much inflated as well. In my opinion, they're pushing the price because of what's happening next month. Everything is all currently being factored in. And hence, that's why all the major currencies against the dollar is currently tanking, like euro, for example, a lot more, like close to 400 pips. So these are things that we look for. So by looking at the whole macro global economy, we look at the whole connectivity, we look at divergence. Divergence is very important. And then from there, we have enough data. Then we look at technical analysis, prove whether if the data is in sync with the technical analysis that we do have. And then we have, mind you, we have a very detailed trading plan and trading checklist. We also have to go through whether we're in check with our mindset. From there, if everything is all in sync, then we place in a trade. Sometimes we do trade major reports, major news, but before we do that though, we as a group, I tell already students to meditate, to get up and running, to get their plans up and ready. So we analyze, we look at it, and we know exactly what to do. And then mainly through what we call multiple time frame analysis. So in other words, that if, say, the euro or say the dollar, let's say the dollar index, for example, is currently bullish, but it's just too expensive, then what we have to do prior to a report is that we're going to wait for the price to come back at demand. We buy at demand. We already know which one, or we're going to put our stop loss, our target points. So when that happens, your risk is so small that your probability is also huge because you are with the trend, right? So these are the major things that we look for: mental conditioning, technical conditioning, body conditioning. Do you have any questions? I'm sorry, I love what I do and I keep talking. So if you have any questions, please feel free to ask. And we're almost finished because I now only have 45 minutes. So,
oh, it sounded good, and we're right on track here, Ronaldo. So no problem at all. TJ was asking if you've ever read Trading in the Zone.
yes, I have. It's a highly recommended book in my opinion by Mark Douglas. Okay, very good book. So here are some important rules successful traders live by, which in my opinion, if you want these notes, let me know, let Jason know. Jason will give you my email address and and I'm more than happy to give it to you. So these are mainly compilations from, if you've read as well, Trading the Zone, Market Wizards by Jack Schwager. Some are some from articles from Intuitive Trader. So I've compiled some of the best rules that a lot of successful traders have lived by, people that I've spoken to as well. My students, some of them are very consistent, better traders than me actually. One guy, he's 25 years old, really good trader actually. He now works for one of the an institution in Chicago. Never loses a single trade on a weekly basis. But I asked him, okay, so what made you be successful? And everything that you taught me, at the same time I created my own rules. Awesome. So number one, successful traders use trading methods that suit their personality. Very important. So I want you to be careful of the systems that you're purchasing. If you don't know your personality, I'm more than happy to help you out. You know, there's just a very exercise that we could do to create your own profile. Whether if you're a day trader, you're a swing trader, you're an investor, or you are a what we call position trader. Sometimes when you're buying a system or you're learning a system and it's for day trading, but day trading is not for you, it wouldn't work. What if you're a type of person who's risk averse and the system is more for longer term, but in actual fact your personality is for day trading? Then it wouldn't work. It has to be in synchronicity with the personality that you have. Hence, is where you can't control what the market does, but you can control your own reaction to the markets. To be a winner, you have to be willing to take a loss. Here is a big issue. If you take your ego aside, that if you accept that losing is part of the game, then it becomes easier for you as a trader to trade, and there's no pressure, because losing is part of it. And hence, when you have that, the word hope is no longer in your vocabulary. That's why you should take that out from your vocabulary. I hope it will go up tomorrow. Well, I'm going to enter hoping it's going to go there. No, it doesn't exist. If you're on a losing streak, reduce your position size. Confidence are always going to be measured by our own results. So if you feel that you're currently having a lack of confidence, reduce your position size. Don't underestimate the time it takes to succeed as a trader. A lot of traders want to be a millionaire overnight. It doesn't happen overnight, guys. It takes time. It takes money. It takes a lot of hours in order to be successful at something. It doesn't matter, it'll be trading, it doesn't matter, it'll be business, it doesn't matter, it'll be sport. Approach trading as vacation, not a hobby. Trading is not definitely a hobby. However, as a professional or as a profession, absolutely. Always have a business and a trading plan. If you don't have a plan, don't trade. If you don't know how to get one, ask me or ask someone that knows. Be honest about your weaknesses and deal with it. The other one weakness that every human being perhaps will also have is what we call the lack of responsibility. By having a lack of responsibility, people start to blame. They will blame the markets, they will blame the people around them, they will blame their teachers, they will blame the system. At the end of the day, it's not the system, it's not the markets, it's about you. You just have to be honest and be sincere about yourself and really see whether if you really have what it takes to be successful at something. To do that, on the other hand, you need discipline, you need integrity. Integrity means that if you say you're going to do it, make sure you do what you say. You need a lot of responsibility. To be an excellent trader, you also need to be in a space of excellence. If you really want to be the best, then learn from the best. Don't just learn from someone where everybody's doing the same thing. The next thing you know, you're doing the same thing, right? That's what basically Einstein really said about insanity, when you're doing the same thing over and over again with different results. So being a great trader is a process. It's not a race. It has no finish line. Never ever listen to other opinions. Make your own trading decisions based on the facts that you have, that based on what the market is giving you. I tell to my students all the time, why are you going long? I want you to prove it to me. I want you to prove it in front of everybody. Why you have to go long? What's your evidence? Like being simply like a lawyer, right? So if you have enough evidence and you can prove it to me and you can prove it to everybody else, then awesome. But if you don't have enough evidence, then don't enter. And then if you're just basing it on your own opinion, an opinion of others, in my opinion, then you're just gambling. So I analyze your past trades, study what happened to the trades after you close a position, whether if you made money or lose money. The reflection aspect is a very, very important. And the reason being is simply that each and every trade should be a better trade. Don't take excessive leverage. It only takes one mistake to knock you out of the game. I'll give you a good example. I was in the euro for so long. I was convinced, based on my own opinion, that the euro is going to go up, that the dollar is going to come back. It's going to drop to correct itself. See, it proves to show once again that news will always affect price. Based on the current facts of the current news, everything was doing well. But when Trump said something, it affected the dollar and it closed everybody up. It closed me up. And I looked at institutions that also got closed out, right? And these are the things that sometimes we have no control of. The market, or there's always going to be the unknown future. This unknown future is something that we cannot control. I just tell that to basically students and to sometimes to my athletes. We cannot control others. We can only control what we can control. We cannot control the market. You cannot control your own relationship with another person. You cannot control your girlfriend, your wife, your husbands. You cannot control your own kids sometimes. You can only control what you can control. And based on that is simply, how can you control the situation when you are at a loss? Acceptance. You need to accept in terms of the risk. If you're not willing to take that risk, don't trade. Okay? Great traders continue to learn and adapt. Very important, hence to have that growth mindset, to believe in open feedback, that if someone tells you something, then are you okay with that? Don't just stand there and let the truck roll over you, meaning that if you know that you are wrong, close the position before you roll over. So being wrong is acceptable, but staying wrong is totally unacceptable. Contain your losses. Good traders manage the downside. They don't worry about the upside. Hence why you only add to your position you are winning. Never add into a losing position. Wall Street research reports will tend to be biased, so I stay away from that. I believe there are better news pieces of information out there aside from Wall Street. Knowing when to get out of a position is as important as when to get in. To excel, you have to put in hard work. There's no easy way out. Discipline, discipline, discipline. So Jason actually asked me, I was like, is there anything? More than happy to give you guys, to test us out for free for 2 weeks. All you have to do is email us or ask Jason. What I want you to do, though, is part of your homework. I want to leave something for you here today. With all the resources that I've been telling you, let me know, email me. I'm more than happy to email you the books that are really good for you to read. And if you notice, in terms of the rules that successful traders live by, it's got nothing about any systems. You simply got to do about oneself, about your being. So your homework is this. I want you to really, really think about on why do you really want to trade. Trading is definitely for everyone. At the same time, though, you need know your own purpose and your own reason why you really want to trade. Can you really put in the time and effort to really be a good trader? What challenges are you currently facing right now with your trading? Is it entries, exits, systems? It's psychology, because there are a lot of different factors that affect someone else's way of trading. Okay, then email me, and I'm more than happy to help you guys out. Like I said, and if you have any questions, please feel free, and this is where we're going to have time with our Q&A.
Ronaldo, thank you very much. That was great. TJ's question about the trading zone was the one question that had come through earlier. The other questions just have to do with what someone could practically do. Do you have any programs that they can enroll in or systems that they can follow that you offer?
Yeah, so because not everyone will be able to come in based on time zones. Sometimes some people like to learn by themselves. So we have a self-learning program. It's a video-based program where they can do it at any time with their own pace. At the same time, though, it is imperative as a mentor and also as a trader is that I believe support is so important. So that being said, they have to come into the class at least 2 times a week for support. And we have live trading on a daily basis. The live trading is utilized for students to find potential trades, to plan out their trades. And then we have a group coaching session once a week. Part of the group coaching session simply is an important element. And the reason being is simply because we don't see the 180 degrees that's behind us. So we look at our own performance base. I do that the same on my own. So for example, when I lost that euro-dollar trade, so what can I learn from that? To go back once again, that the markets definitely will do whatever it wants to do. And in return is also to follow vision, that it's no longer safe just to get out even before the stop loss is being hit. So the program itself does not just include about the technical component. It involves, excuse me, it involves the mental game and the physical and the technical game.
Okay.
My philosophy.
And maybe we can get a link to that so that we can include that along with our follow-up.
Oh yeah, absolutely. Is it okay if I email you then, Jason, the link?
Perfect.
Yeah.
That sounds great. We'll go ahead and get a recording of this out to everyone. Ronaldo, thank you very much. We're right at the top of the hour here, so we're always want to be respectful of everyone's time. And by all means, we will include his email as well so that you have that handy and can reach out directly. We'll call it good there, Ronaldo. Thank you again for a fantastic presentation, and thank you everyone for joining us.
Thank you, Jason. Thank you everyone for listening. Have a good day and happy trading.
Outstanding. Perfect. Take care.